Hello, everyone. You're welcome to this episode. Today, I'm going to teach you guys a very simple and profitable entry strategy because most people struggled for entry. You know, for you to take position is always a very difficult thing. You understand? It's always a very difficult decision for most traders. And that is where they are always missing the point. All right. It's either they enter prematurely or they don't even know when to get in, as in when to take position. So I've already taught my mentees, people that are following me, I've already showed it to them. I've already simplified entry for them because it shouldn't be a problem. Okay. Once you know how to do your top-down analysis, entry shouldn't be your problem. All right. Once you have done your top-down analysis, you know where to wait for price. And as soon as price get to that your level, all you need to do, you wait for a confirmation for uh, a candlestick uh, pattern, all right, that you need to use before you get into the trade. Once it forms, you don't need to hesitate. You just take position. After you place your entry, the second thing you need to do, you use your stop loss order, your target, all right, set your target and allow the system to do the rest for you. You don't need to do anything. But there is what we call trade management. If you are someone that is free, you are not doing any other thing. Once in a while, you look, you just look at the chart and see how the trade is going. So that is how it is. And I said simple and it's a very profitable entry strategy. Now, let me just show you guys one thing. Let's assume you open your chart and price is here. What do you need to do? It is established that we are what? Bullish. Why? Because there's a break of structure to the upside. You see price breaking structure to the upside, right? So we now know that we are bullish. All right. So all you need to do is wait for price. All right. As it stands now, let's play this and see. You see, price is still going up. All right. It's still playing out. Do you need to do anything? No, you don't need to do anything. And another thing we should understand is that we need to be patient. All right. We need to be very, very patient when we are trading. All right. As it's doing all these things, now you now see it will get to a point where it will start pushing to the downside. All right. You see price pushing to the downside. You now see when it created this, what happened? It started coming down. All right, at this point now, all you need to do is you just wait for price. Now he has created a low here. You just leave the price action to start to like let it play out, let it start going. You just be watching it as it's going. All right. Then as it is now, it's still coming down. That is to tell you it's still coming down. So this is a bearish movement. All right. It's been bullish all along. Now this is a moment of relief. All you need to do is you remove this and you now know, okay, look at it. Price has now created a low here. All right. How do we know that it has created a low? Because of this swift movement. All this while that price has that is coming down like this is a moment of relief. Now it's been bullish all this while. It's been going up. Now it created a high. This is a high. Now it now came down, a pullback, and it now created a low. After it created this low, you see this buy. It took off from here. That is to tell you it has created a low. Now it now took off from here. All right. Do you need to do anything? No. You wait and see if price will create another high here. So we have identified a high. This is our high. All right. We have identified a high here. Oh yeah. All right. We have identified a high. Okay. Then we have identified a low. We have identified a high, a low here. All right. Price has created a low. All right. Now, price also has created a high. Remember what I taught you guys? This thing you see, this one, because we are bullish, all right, because we are bullish, this very one here should be tagged as what? A weak high. Guys, don't forget it. It should be tagged as a weak high. This is a weak high. Why is it a weak high? It's a weak high because this when this high was created, there was a push to the downside. But did it break this uh, low? It did not break this low. It came and it stopped here. All right, it stopped here. Then there was a sell-off. Now, what should we be expecting? We should be expecting price to come and take this high. We should be expecting this push now, no matter what it does here, because there will be a little rigmarole here. I will call it a pattern. All right, it has to create a structure that will enable it push, gather momentum, push to break this level. All right. So at this point, we have identified our weak high. Then we are now saying that this point here is our strong low. All right. This is our what? Strong low. A strong low. All right. We are saying this is a strong low. But is it confirmed yet? No. We just identify them. All right. We just identify them. Now that we have identified them, what we need to do is that we wait for, let's see what price we do in between this point. Let's wait and see what price we do now. All right. So I put it on a play mode. You can see, did he break the structure up? No. He only pushed to this level. He created equal highs. He created equal highs here. All right. Okay. What do we need to do? Do we need to do anything? No. We just need to wait. We just need to wait. All right. Our waiting now, because we now see that he has created equal highs. Okay, let's see what happened. Let's just see what happened. So all this one, you don't need to do. You cannot see price coming down. All you now need to do at this point here now is to carry your fib. If you are somebody that you like to catch, maybe, okay, I don't want to go too advanced. All you need to do at this point, I just want to show you guys how to take a perfect entry. You now come, all right, click from this low, to this high. Put your Fibonacci tool, take it, plot it. This is 100%. You start from the down, put your 100%, then the 0%. Don't worry, if you don't know how to set all those things, I'll do a video for you guys so that you understand. You have all these numbers on your fib too. You know how to just do it. So you take this 100%, then you drag it to the top where it created a high. Then you put the 0.00%. All right, your target point, where you will now set your target. Remember, I told you your target should always be negative 27. Your first target is your second target should be negative 61.8. All right, now that we now see that price is pushing or pulling back now. Now, remember, I told us when you want to buy something, you want to buy something cheap so that you can sell high, right? Now we should be expecting price to come down. Anything above where price is right now is what we call premium, premium level. This is premium. All right. Anything from this 50% up is premium. Anything from this 50% down is what? Discount. All right. So this is where you draw your line. You wait for price to trade below this 50%. I'm showing you entry strategy. This is a very simple thing. You don't need to struggle. All right. Now, all you need to do is for you to just wait for price to play below this level. All right. Now let's play the price and see. You can now see he got here. He has come down now. All right. You can now see at this point price has touched. He has traded below, price has already traded below our 50%. Now, when he got to, there was a reaction, but he broke this 50%. He now tapped into this, our discount level. And apart from that, he even touched the golden level. All right. The golden level that is 61.8 and 79.0. These are the golden level. He even pushed and tapped our golden level. All right. Now, when you enter from here now, let's say it's okay. Let me just enter from here because you know that he has tapped in. But don't be surprised. Price can push up to this 79.0. All right. So for you to enter from here is a little risky. All right. It's a little risky, but some people want to cash the groove early. All right. Now, as it is, you allow price. All right. If you enter from here and you say, okay, my target point is this negative 27. You put your stop loss below. It's still risky. Why? Because price action can push below. It can push below. It can still come and get a sell off up to this 79%. All right. Okay, let's see what happened. Let's see what happened. You see, what did I say? You now see, price now has pushed below, has pushed below. Now it has pushed below 79%. Now what happened? There was a rejection, a very sharp rejection. All right, a very sharp rejection, telling you that the buyers rejected this because it's coming. He has traded even below this 79, this golden ratio. All right. This is why some people will enter early and they get stopped out. That is the point I'm trying to make. They get stopped out. Remember, when price is pushing to a discount level, anything from 50% that I told you, from 50% to 79%. But once you see price push below 79%, tap into 100%, that is telling you that is going to violate this strong low. I'm telling you. So at this point, then you now see a very sharp rejection. Even though he tapped below, but it closed above. So let's watch the next bar market now. What happened? You see? Exactly. Now, this is our entry. This is our entry because we now see a bullish run. This one is not our entry. This one is not our entry. Our entry now should be this. At this point, this is our entry. So you just pull this thing below this point. All right, you enter from here and target this point. All right, you just target 27.0, negative 27.0. Even though if you want to hold more, you put your target at negative 61. Then you now allow, once you have done this, this is your entry point. This point is where you enter, all right? And this is where you put your stop loss, all right? You put your stop loss here. You put your stop loss here. Put your stop loss here. All right. This point is your entry. All right. Don't mind this writing. I just want to do it fast because of time. Then your target will be at either this point. Your target will either be either this point or this point. Your TP. All right. Your TP. Usually this is TP1, this is TP2. All right. So this is TP1. Guys, follow me. This is very simple so that you guys will not be struggling. This is TP1, then this is TP2. All right. Because here, once you tap into this TP1, it will just, there will be a reaction, market will move around, then it will now come and hit your TP2. That is usually what happens. All right. Now, if you now allow this thing to play out, let's see what happens. Let's see what happens. You can now see that price has, if you had entered from here because you are in a hurry, it will push you out. But he has already given you another entry. Some people now, once it take you out, instead of you to know that you enter prematurely, you will now be afraid. That fear will now grip you. Now that he has given you another opportunity, you can see our TP1, TP2 is already hit. And after that, what happened? You are seeing a pullback. It's now coming to the downside again. You see, once he push you out like this, it should occur to you that you entered prematurely, that this level is not supposed to be where you entered. And what happened? Once the market present itself again, you now see that there was a push to the downside and it closed above 79%. All you need to do is to gladly take position again without any fear. In trading, you don't need to fear. Do your things right and take position. Thank you. Subscribe to my channel. God bless you.